Hey guys, welcome back to the Richard Fernando Investing channel. Check out the regrowth on the bleached blonde hair. It's not looking too good. But great to be back with you today. A nice and simple video, a video that I wish I would have seen when I first started investing about 3-4 years ago now, which would have helped a lot back then, but you know, I'm glad that I did learn these little things along the way, and hopefully I can share with you guys now, and it's useful for you. So today we're going to look at ETFs, and mainly index ETFs. So there are so many different types of ETFs, which are exchange traded funds. Basically, it gives you exposure to a lot of stocks without you having to go out and individually pick them all. You can essentially be exposed to all 200 or 300 of the largest companies in the Australian market, for example, without having to actually split up all your money across a lot of them. And it's even more useful here in Australia because we don't have free brokerage, and you know, we actually have to pay fees to the big four banks, all that sort of stuff, just to invest in things every now and then. You know, there's a fee for the buy and for the sell, which isn't commonplace in the US anymore, which hopefully changes here. But yeah, this is a great way for you to be able to have a bit more of a broad exposure to more things at once, and hopefully protect yourself a bit from more of those downside risks that come with investing. Now, before we jump into the video, be sure to subscribe, and also we finally have the Instagram up and running. Initially I had my personal Instagram kind of linked to the channel, which probably wasn't the greatest idea just in terms of keeping more of the investing related content in the one place. So I've got that all sorted. The Instagram is Richard F Investing, or Richard Finvesting, so it's nice and easy to remember. So yeah, be sure to follow that. And if you're not from Australia as well, there is a couple tips in here that I think you would definitely enjoy hearing, or at least get a bit of value from. So be sure to stick out the video. But to start, just in general with Australian stocks, and I guess the best index fund, honestly, it changes every day. Right now, it's the beta shares option because they have the lowest fee, and that's what you want to look out for. You want to see how big of an expense ratio they have, which is essentially the fee that the ETF managers take from having to deal with, you know, bringing in all this money and kind of diversifying it and allocating it as per the ASX200 index, or ASX200 or whatever index you're trying to track. So yeah, they take a bit of a cut, and that's how they make their money essentially. And yeah, there's usually a bit of a fight to the bottom, or there has been in the last few years, which is good for us in terms of just fees being brought down. So that is why I personally own the Vanguard option, which is VAS on the ASX. But since then, yeah, beta shares has come in, and they have an option which is slightly cheaper. I'll tell you the ticker symbol. Alright, ticker symbol is just A200. Yeah, and VAS is the one that I'm with. But again, you know, if I had my time again, and if I had to buy into an Australian index fund right now, I would definitely go with A200, because, you know, why give a big bank or a big financial institution more money than they have to take from you? But what do I suggest, instead of, you know, coming to this video all the time and just trying to remember, oh, okay, he said this is the cheapest? Search for it yourself. And how do you do it? You just go to CanStar. CanStar is a website that I used to use just for general consumer finance type stuff. So, I don't know, best saving account with your bank, or best insurance, that sort of stuff. But if you go to CanStar, which you would probably remember as well from like their consumer type stuff, like their actual product reviews, you can go there, you can go to investing and finance, and from there you can go to ETFs, and then ETFs you just search by expense ratio, or you sort by expense ratio, and it should give you the best option at this point in time, however updated that website is at that particular point in time. So yeah, right now A200 is the best option, but regularly check, and I mean, a 0.07% expense ratio is pretty sweet anyways. I doubt it's going to get much lower than that. So if you're in the US, same applies. Just find any kind of a comparison website and just try and sort by expense ratio. Usually you want to go for the the smallest, and most of the time these ETFs will be tracking the exact same thing. I mean, you can check the performance, but they should be pretty much spot on the exact same. Just in terms of their execution, I guess there could be a slight difference, but that's about it really for ETF index funds. Another tip that I think is really helpful, and I wish I knew when I was starting off, is if there's a stock, for example, for me it was Tesla. that you're not 100% sure on, you don't want to take the risk of being fully exposed to how volatile the stock is, and you still want some sort of exposure to the stock, there's a few tools that I find super useful. And this applies for the US and for Australian investors. What you can do is you can just Google ETF Screener or ETF Exposure Tool, Stock Exposure Tool. The best ones that I've found, you can just search the actual websites, ETFdb, yeah, ETF database, and then there's also ETF Channel is the other one, etfchannel.com, something like that. Both of those websites, they're great. What you can do is you can go to their tools section and you can reverse search. So what does that mean? Basically, I want to be invested in Tesla, but I don't want to just own Tesla stock directly. I don't want to go through that hassle either. You go into that website and you just type in ETFs with Tesla in them, basically, and it'll give you a list, and you can sort it by weighting, so how much Tesla they own compared to everything else that they have under their under management. And it'll give you, for example, the top 3 or 4, if you sort it, ETFs, if you want a bit of Tesla exposure and how exposed to Tesla they are. So that's what I found really useful. I used that tool to find an ETF called KWEB, KWEB, when I was a bit unsure about certain Chinese stocks, but I wanted exposure to Tencent, Alibaba, JD.com, all those, and some that are listed in China itself. And that's the other big use of these ETFs. So you can be exposed to companies that aren't necessarily traded on the exchange that you have access to, which is really good. You're opening up, I guess, your accessibility to whatever stocks that actual ETF managers can access. So it's a lot more intuitive that way. In the Australian market, for example, there's a lot of popularity right now in a ETF called FANG, which just gives you exposure to a lot of those big US names, and you don't have to go through the hassle of actually opening an international brokerage account, anything like that. It just gives you automatic exposure. It's nice and easy, although again, you have to always be really careful of the expense ratios with some of those more active funds. So I can talk for days really on all the uses of ETFs. I mean, there's some that are inverse, that kind of try and short the market for you without you having to actually take a real short position. There's some that are leveraged. There's so many kind of diverse and really exotic type financial products that are kind of packaged as an ETF. But this is just some general info on how you can hopefully use them to your advantage. If you are interested in directly investing in the US, by the way, I do have a referral link for Stake, which, hopefully, I'll show you their hat actually. Give me a sec. These guys. Yeah, I don't really wear snapbacks, that's why I've never even opened this up. But I use them to access the US market. No brokerage is paid, which is nice. You just pay the exchange fee. I've got my referral link in the description, but feel free to not use it if you don't want to. But yes, that's what ETFs will generally help you with. Some are exposed directly to countries, that sort of stuff. But without getting too bogged down in the details, definitely check it out. Definitely check out all these tools that I've given you, the 3 websites. So CanStar, then you've got ETF or Exchange Traded Fund Channel and Exchange Traded Fund DB database, which are all very useful to hopefully help you make a more informed decision when ETF investing. But thanks very much for watching, and be sure to subscribe, like the vid. Cheers.